fast fashion giant Shein's highly anticipated IPO is expected to take place at some point this year, but little is known about how much revenue the retailer brings in right now. CNBC reports Shein sales could actually be a lot more than $30 billion annually. That's according to a key partner. For more, let's bring in the reporter behind the story, our friend, CNBC.com retail reporter Gabrielle Fonrouge. Also joining us is fashion Launchpad founder and CNBC contributor Sandra Campos for some perspective here. Welcome to both of you. Gabrielle, we'll start with you. What have you learned?
So there's very little known about how much Shein makes, how profitable they are. I mean, they're a private company. They don't actually have to disclose anything. You know, what we know from some reports that came out is that they did $23 billion in revenue in 2022, and they set out to raise that number by 40%. So now the market kind of thinks that they're making about $30 billion a year. And what we heard yesterday at the ICR conference in Orlando from one of Shein's key partners from Authentic Brands Group, who they partnered with last year, that number is actually a lot more than $30 billion. Of course, he didn't disclose how much that number is, but you know, Authentic Brands is in a position to know. Last year, they started a partnership with Shein where they started selling a co-branded clothing line with Forever 21, which Authentic owns. So they had to open their books, and these people know how much they're making, and it seems to be a lot more than everyone thinks.
And if that's the case, Sandra, we're putting them in terms of their heft and their size in the retail world on par with the likes of Zara and H&M. Is that right?
Even more so, even greater than that. So right now it's estimated that they actually have about 20% of the fast fashion, the global fast fashion market share. That's pretty substantial, being that they were projected to just be selling about $4 billion in 2019. So they've had exponential growth since the pandemic.
What is, Sandra, what explains their success?
There's a few things. Number one, they use teen influencers and user-generated content, which are the teen consumers themselves. So it's not just Gen Z, but they were definitely the ones. If you look at just TikTok and how many people are talking about Shein hauls, it's almost 15 billion views on Shein hauls. And that's just coming from the holiday time period. So that's one. The second thing is that they've really figured out the supply chain. They have an agile supply chain that is not really focused on what's happening on the runway and waiting for trend research. They're really focusing on having a lot of designers that are outsourced. And those designers are constantly pumping up a lot of product, about 1.5 million styles in an annual basis. And that's about 37 times more than Zara and 65 times more than H&M.
That said, Gabrielle, there was some focus recently, I think in the Wall Street Journal, about how it's not as lucrative for the suppliers as it is for the parent company. At what point do you think suppliers might push back?
So this is a big issue right now for Shein. And in order for them to remain competitive and to be able to continue with this crazy growth that they've posted, is they need to keep those suppliers loyal, because that's really their secret weapon. It's called like the ultra fast fashion manufacturer and supplier. These aren't the typical fast fashion suppliers. These are manufacturers that are able to turn around styles within days, if not just a week or two. And that's also a fresh design as well. So Shein is able to identify designs that are getting popular on TikTok, online. They send those designs over to the manufacturers and they turn it around really quickly. But there's a lot of competition for those suppliers as well. You've got Temu, which is what Shein doesn't consider it a competitor, but many others do. Temu is competing for those very same suppliers. And Temu actually recently sued Shein in federal court here in the US, accusing them of mafia-style tactics, accusing them of signing loyalty oaths and things like that, requiring these suppliers to pledge their loyalty to Shein and, you know, pledge that they're not going to work with any other competitors. So, you know, but if Temu is willing to offer a higher price, if some other newer entrants to the market are willing to offer a higher price, then, you know, Shein is gonna, they might lose some of those suppliers, some of that loyalty. So that's gonna be a really big focus for them. And what kind of impact is that gonna have on their margins?
Sandra,
you know, there's so much we don't know about this company.